Hey everyone, it's Mike from Orderflows here, and welcome back to my channel. I'm glad you could join me for today's video. I'm going to be talking about stacked imbalances, okay, and how it gets misused by traders. But before we jump in, if you enjoy learning from my videos, don't forget to subscribe and click that notification bell so you don't miss any new upload. And if you find today's video helpful, be sure to hit that like button for me and leave a comment sharing your biggest takeaway. I love hearing your feedback, and oftentimes your feedback gives me ideas for new videos to make, based off of your suggestions. So your support really does go a long way in helping me create content just like this. So let's go ahead and jump in today's topic. All right, so imbalances. Specifically, I'll spend some time talking about stacked imbalances, okay? Because, an imbalance occurs because there's basically an imbalance between the aggressive buying and the aggressive selling. So you have buying imbalances, you have selling imbalances, and the question does come up every once in a while. What is the optimal sort of percentage or ratio in determining a buying imbalance or a selling imbalance? So you can see here, right, the red number in the footprint, right, 42 against 7, that is a selling imbalance, whereas the blue number in the volume in the footprint is a buying imbalance, 14 against 66, 5 against 24. Now, you can adjust your imbalances in your footprint chart if you're using my Orderflows Trader software. You would find it up here, imbalance trigger in percent. We actually have another little setting that's, in my opinion, equally as important, is minimum imbalance volume. And really what that means is you can see the setting of 10. So it needs at least 10 contracts traded on the heavier side, either for the bid or the offer, for it to start calculating an imbalance. And just really quick, just show you why that's important, is because sometimes you're going to have volumes like this, 1 against 7. Is that a imbalance? Well, technically yes, it's 1 against 7, but I like to have a little bit more meat on the bones. If it's not showing up as an imbalance, the 7 lots, because it's less than 10. Okay, and again, generally speaking, in most markets, it's not going to be a problem. But when you start looking at thinner markets, some of the grains, seed oils, meat, again, not everybody really trades, those other contracts, but, for those type of traders, it's going to be important. Or if you're trading, say, MNQ or NQ or even YM, in the evening times, you get a lot of 0 against 5, 0 against 6, 0 against 7. Technically, those are imbalances, but it's just not, in my opinion, strong enough to sort of warrant an imbalance, right? I like to use that minimum volume threshold. Now, a stacked imbalance, what that is, it's 3 or more imbalances stacked neatly on top of each other. So, for example, here you've got 3 against 24, 3 against 21, 13 against 70. That is a stacked selling imbalance. Up here, you've got a stacked buying imbalance. You got 0 against 12, 0 against 12, 0 against 15, 5 against 34. Okay, and the thing that makes stacked selling imbalances unique is it's very visual, because you have those 3 imbalances, one on top of each other. Okay, hence the term stacked. Now, what causes that? Well, oftentimes it can be a couple things, right? It could be a big order going through the market. Maybe somebody had, 50 lots to buy or something, or 70 lots to buy, so they just swept through the market. Or they had, 100 to sell, so they swept down through the market, right, here and here. It could be, just like I said, just a big order. Sometimes it could be a stop, right, that gets triggered. Maybe this was like a little swing low here at 43.20. You see the selling imbalance coming in right below that level at 43.10 starting, and it goes down. Maybe there was a stop that got triggered there. But really, at the end of the day, what it is a sign of strong aggressive buying if it's a stacked buying imbalance, or strong aggressive selling if it's a stacked selling imbalance. Okay, now this is where, once you guys understand that, this is where it gets, the practical applications of it, how to use it in your trading. Because, just because you got a stacked buying imbalance doesn't mean, oh, I got to go ahead and start getting long. Or if you see a stacked selling imbalance here and here, oh, I got to get short. There's a lot of aggressive selling coming in. Yeah, there is aggressive selling. Obviously, you got these imbalances. That doesn't mean you just pile in immediately. Okay, when you have a big order, that's one thing, right? Big orders going through the market, but you need follow through. Okay, you want to see it continuation, right? Because again, yes, it's nice to have a big buyer or a big seller come into the market. But once he's done, is there any other impetus in the market to give it a push in that direction? So just because I see, excuse me, stack buying imbalance doesn't mean I'm going to just jump right in, right? If I jumped into this stack buying imbalance, well, it came right back down and would have stopped me out. This selling imbalance over here, okay, you see the follow through, you see more selling imbalances in the next bar, okay. It goes down a little bit and you even get this other stack selling imbalance, but it's just mostly going sideways, okay. And part of your maturity as a trader is recognizing a market that's going sideways. Now, in the Orderflows Trader software, in my software, I have a couple different ways, 3 different ways of looking at it. One, you could identify the stack imbalance, either stack selling imbalance or stack buying imbalance, just directly in the bar like this, okay? Or another way that a lot of our traders use it is to draw it out until tested, okay? So you can see 3, right? If I wanted to make this cluster size bigger, right, because I've got 3 imbalances stacked on top of each other. If I want to make it more stricter, I could change it to 4 or even 5, but 3 is fine for most markets and most traders. Change it to until tested here, okay? So if you want it to be just in the bar itself, right, you change it to fixed, imbalance zone size on the bottom to 1, okay? But if I want it until tested, meaning that there's a stacked buying or selling imbalance in the bar, and then we immediately move away from it, right? Like right up there, I see this is stack selling imbalance coming in, right? We just made the high, we're selling off, stack selling imbalance, continuation in the next bar. I have this zone here, right? If I know I have this zone being drawn out, then it's telling me that, hey, you know what? This is a strong selling imbalance. I've got some follow through. We're staying below this zone. That this is probably a strong imbalance, strong stacked imbalance, right? And you can see the market continued to sell off quite nicely. And again, take them in context of the market. Okay, we had just made a high of the day up here. Now this was at 2 in the morning, and we're starting to sell off. So we're about $2 lower off the high. Okay, but then we sold off from 44.70. We got all the way down to 40s. Down here into 41s, etc. So we had a nice, $4 sell off from that high of the day. Now, another way that our traders use stacked imbalances, right, in terms of determining is a stacked imbalance worth taking, is if you were to use the fixed version of the zone. So let me just draw it out here. Stacked imbalance, right? I'll change that from until tested to fixed, and I'll use 5, right? Now, the reason I use 5, I have a specific reason why I use 5, because it's starting at the bar with the imbalance, stacked imbalance, and goes out. So that's bar 1, 2, 3, 4, 5, okay? What I have found is even if you're trading back into the imbalance, okay, so we'll start with the stack selling imbalance, and it's holding, it's still, it's trading back in. That's normal to see the market trade back into an imbalance, okay? Because really what you want to see it come in and see more aggressive selling. You're looking for the market to sell off. If it's on the other side of the imbalance, right, like this one, right in the next bar, it's trading down into the imbalance because it's a stack buying imbalance, right? We should be trading above it, but we're trading below it. If we're definitely trading below it and closing below it, then that's a sign to get out. Okay, just as here, right? We have a stack selling imbalance. So out of these 3, 1, 2, 3, this is really the only one that's kind of worth taking, right? How some traders will do it is, what they'll do is they have this imbalance. They just drop a limit order in there around, somewhere in the middle of the imbalance, wait for the market to trade back up in there and give them a trade. And there you have a very tight stop just on the other side of that imbalance, right? So again, now this one, and same with this one, right? This is a selling imbalance, right? You're not going to get short. You're not going to drop a limit in there when you're trading already inside or just even in here. What you'd want to do, right, for this stack buying imbalance, you want the market to start going up, then you drop your bid inside there, not just immediately get long in the next bar. At least here, right, it's traded down, okay, then you could drop your offer inside. And again, if we're closing on the other side of this zone, right, either here, 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 or here, that's your sign to get out. That's probably not going to work, right? Obviously, it just didn't work, right? It just eventually went up. But again, what you want to do, right, is you just drop in a bid in here, right? You could buy in here. You got a tight stop, 3, 4 ticks away. Okay, you get stopped out. Okay, you get stopped out here. This one you wouldn't take. But again, if you take this, you're getting short at 43. To move down to, 41, down to 42. So, you could have a 2-to-1 risk, right? If you're risking 3 to maybe get 6, 9, 12, it's up to you. Okay, here, another one, right? Stack selling a balance. We're testing it. We're coming back inside, and then we sell off. It's not a massive sell off, but it's holding below. So that's how you can use these zones to, trade pullbacks into selling imbalances. Now here you got a stack buying a balance followed by a stack selling a balance, okay, which they kind of neutralize each other in that sense, and we're just trading inside. Again, it's not one that I'd be looking to get short in here, because if I'm looking to get short off of this stack selling a balance, I'm looking for the market to come off a little bit and then go inside and test it. See if there's anything else. So that was that one that was from earlier. Okay, so I mean that's gold, right? If we were to look at E-minis, okay, so again, something like this, yeah, you just drop in a buy in here, buy limit 49 3/4. Okay, it comes down here, stops you out. You try it again here, comes down here. This is just unfortunate, right? If you drop in your buy limit here at 50, 43.50, comes down to 49.50. That's just 3 ticks, and then it goes up 2 points. Sort of same thing there. But here's a nice stack selling imbalance, right? We're trading below it, which is what you see it sort of come back up, testing, and then sell off, right? So when I see these things, these stack selling imbalances that are not retested into as well, to me, those are great opportunities. Here's another one. Here's one. It pulled back right in that bar. This one, again, sort of just pulled back right in there. Here we're pulling back into the first level. Okay. So what is that? 50. Who knows if we got filled? Ideally, your ideal entry should be somewhere here around 56 with the stop just above. Okay, so you lose a half a tick, half a point. But here you go, right? Here's a nice buying imbalance that isn't retested in the next bar. It's your sign to get long. Just as this one is your sign to get short, but then you run into that stack buying imbalance. Okay. Here's a stack selling a balance, but you retested it right in that next bar. I mean, it opened up here, then shot up. So we're opening up below. I guess, the point is, as long as you open up below a stack selling a balance, that's your sign to drop in your offer. Or if you open above a stack buying a balance, that's your sign to drop in your bid there. Okay. And it's just unfortunate that it just pulled back a little bit more. That's sort of the issue with trading pullbacks, right? Because if you're trading a pullback, depending on how deep and strong the pullback is, it can pull back just a little bit more and then stop you out and then sort of make a decent, this is not a great move, but again, if you're buying it in here, this is a 4 level, right? 1, 2, 3, 3 levels. If you're buying it in here at 70, you got your stop at what, or 75, your stop is here at 4.5, it pulls back to 4.25, and then shoots up to 77. So your 2 points is gone. You got stopped out. Fine. That's how you keep your losses small. Those are low risk entries, right? You're literally just risking 3 ticks. You get stopped out, right? Then you just wait for the next opportunity to come along. Okay. So there's different ways you can trade them, but realize what is stacked imbalances. It's a big order going through the market, and really what you want to see is potentially a pullback into it. But if it's not, the market's not reacting, right? If it's not pulling back into that stacked imbalance, that could be your sign you want to go with that move. So anyway, guys, I'll end that video on stacked imbalances. It's one of the different ways that you can use stacked imbalances. So if you find these videos useful and helpful in your trading, let me know. And be sure to subscribe to the channel, hit that notification bell. So thanks so much for watching and being a part of my order flow community. And I'll catch you guys on the next video. Bye-bye.